Good evening, everyone. This is Doug Campbell with Right Way Options. And I'm doing the e-learning session tonight, actually for Hit and Run Candlesticks. Rick and I team up together. Most of you guys know that. And have been doing that for quite some time now. And I'm starting to do some of the public webinars on these Tuesday evenings just to kind of change things up and give Rick a little bit of a break from time to time, talking about trading concepts. And tonight I wanted to do something a little bit different than what I normally do. I talk about price action all the time, but what I don't talk about much is how different seasons can kind of come into the market. And would anyone agree that since about February, it's been a pretty challenging market to trade? In fact, it was really challenging in February. But things that were working perfectly before aren't working quite as good as they used to. That we got used to the idea that you buy a trade, you buy a position. Last year it was like buy a position, make money, buy a position, make money, buy a position, make money. This year, we're finding that much more challenging. And everyone has probably heard that old saying, sell in May and stay away. Right? Now that has not been a good statement at all the last couple summers. Last couple summers, we just kept moving up. But this summer may be different. Okay? This summer may be different. Credit spreads are great for this kind of market, Jamie. Because I think what we've done, and there's not going to be any, this is the only slide you're going to see tonight, guys. In fact, we're going to jump right to the charts. But I think what we're going to see is a different summer than what we've seen. And how can we profit from that? How can we make money in a market that's so challenging? Okay. So first, before we jump into that, let's take a look at the overall market. Let's see what the overall market is doing. Looking here at the diamonds right now, you can see today was a pretty darn ugly day. That big push down, this could be a complete failure. If we get a follow through tomorrow to the downside, a failure of the uptrend line that I have drawn here. Now you could draw that another way. You could choose to draw this down here. That would be okay. And we're still holding. Okay, so a follow through tomorrow would be a bad thing for us here on the Dow. And we've been locked in this consolidation range here for a while. And I've been talking about that in all the morning videos and blogs and things about that trading range, how that is going to determine or give us an opportunity to trade long or short, and how it can be a little bit challenging to trade in a range like that. Well, now here we are testing the 50-day moving average. And at the close today, we ended up closing below the 50-day moving average. We're clearly below the 34 EMA. Not a good sign. We need this market to bounce up here soon, or we could be in real trouble here on the diamonds. And I know the diamonds is only 30 stocks. Okay, 30 stocks. But we also know that that's the first number, and if a news agency is only going to report one number, they're going to report to you what the Dow did today. And that gives everyone the impression about the overall, the rest of the market. And we can see the Dow actually sour the other indexes if it continues to stay bearish. So we need to see a bounce in here, and we need to get back above and hold that 50-day moving average. Because we all know the pattern, right? A failure of the 50-day moving average We drop through the 50-day, we rally back to test it as resistance, and then we set a new low. It's a very common pattern. We've seen it over and over again. Now this one, we popped through the 50. But there was that test to the 50, and then we set a new low. Test to the 50, and we came back down. We don't want to see that occur. We want to see this hold in here and maintain bullishness. Now the good news is, if we look at the SPY, SPY is stronger. SPY is holding up better. It's holding right off of this little level of support, this little platform that we put in here last December and January. Okay, and we bounced up off of there. We're holding above the 50-day moving average. We're right there around that 34 EMA. We need again to see that bounce up. Okay, now to describe this a different way, you guys will see me, I've been showing this chart quite a bit here lately. And this is just the 3 EMA moving averages, the 3, the 8, and the 34. And you can see this pullback in here to cut below the 8 EMA is okay if we can get that response back. Cross down below, cross back above, and we have a potential entry point. Okay, cross down below, over here, cross down below, cross right back above, and we have a potential entry into a trade. So those are really, really good patterns to be looking for, and you can see it happens. I'm going to back this chart up here a bit. Cross down below, cross back above. Cross down below, cross back above. So as long as the SPY, the diamonds, can put in this pattern and cross right back up, we're going to be okay. But if we follow through down here and we start dropping these moving averages below the 34, we could be in some serious trouble. So far the SPY is stronger than the diamonds. If you look at the diamonds here, we're stronger. Our 3 EMA is trying to cross down below the 34. Not good. We need this to pop back up. Okay, that's going to be really important. Now, if we take a look at the Qs are in much better situation. Qs held up strong today. Even under all of the pressure of selling that we saw in the Dow, they held up well. We do have to, however, pay attention to the fact that we are in a potential topping pattern here. A failure at this point would be critical, particularly if it gives up the trend. But if we can hold in here and then pop through, we've got nice potential here in the market to stay on the bullish side. So right now, Qs are holding up stronger than the SPY and the diamonds. We need that to continue. We need to stay up here. We need this index lifting the others. If we take a look at the IWM is the strongest. IWM broke out all-time highs, pulling back, testing that all-time high breakout as support, and at least as of today, we're holding it as support. Okay, we're well above our 34 EMA. A consolidation in here would not be out of the question. Or we could see this bounce helping to lift the rest of the market. So we have 2 indexes that are clearly a little bit shaky and 2 that are holding up pretty well. So that puts us in kind of a conundrum when it comes to the market, right? Because we have a couple trying to hang in there. We've got a couple looking south. It kind of puts us into a tough situation. I'm going to take this back just a little bit further. You guys know that I like to look at the bigger picture. And I'm going to take a look at the diamonds. And I'm going to pull this back on a weekly. And I want you guys to notice back here, we had one of these really long run-ups. Multi-year run-ups. Whoa. That's weird. It didn't fully transfer that chart. Can you guys hear me? Okay, everybody can hear me. Yeah, that's bizarre. Hold on, guys. I'm going to reset the camera. Oh, there it cleared. It could be something with Onmovia. If we take a look at this here, we had this really long run up in the diamonds. Okay, or the Dow. And notice that that was followed by a very long consolidation. And, you know, we got a little choppy in here. Okay, but that consolidation essentially lasted 2 years. Okay, I think there's a high probability that after such an extraordinary run up, that we could be locked into a range in this market for a period of time. Now, anyone that traded this period of time, I know Rick is here. Did you have trouble making money in this time period, Rick? Or anybody that was here? There was money to be made during this time period. In fact, good money that could be made by both swing traders, option traders alike. But over here, to make money, you have to be very disciplined to your trading. During these periods, we can break all kinds of rules. We can do silly things. We can chase stocks. We can do all kinds of things and still make money. You guys have mentioned something, all of a sudden, something's not working. The market has changed. And we have to recognize that change. We have to recognize the possibility that we could be in a longer term chop zone, consolidating zone. So for the swing trader, before everyone goes out and, you know, tries to find a rope and hang themselves with it, there's good news in that too. If you're a good technical analyst and you are good at sticking to your discipline, that means following your process, sticking to a good set of rules. Okay? If you're a good technical analyst, this is a stock picker's market. Over here, anybody can make money. Throw a dart, and you can make some money when the market's running up like that. This is where the real traders show up. This is our opportunity to outperform even the big guys. Okay, because we can be more nimble, we can be faster and more flexible than even the big guys. Now, I'm not talking about being a speed trader here. You guys know I'm not a day trader or anything like that. In fact, what I'm going to tell you is we're probably going to have to hold trades a little bit longer than we did over here to make our money. So we need to think about during this period over the summer, and just know that summer trading normally has lighter volume. We'll be more affected by international news like we were today. We'll be more affected by political, stuff going on, because the market is just going to be a little bit light, a little anemic when it comes to volume. It's pretty normal. Okay. In fact, it happens more during the summer than any other time. Hence that old saying, sell in May and go away and stay away. Don't trade. But for those of us that are swing traders and chartists and really work hard on our charts and have the ability to stay disciplined to a set of rules, we can outperform even the big money managers out there. Okay? We can outperform them because we have that flexibility. So what are the things that we need to look at here? Well, a few ideas for you guys that you might want to write down. How many in this room just really don't like shorting? Just don't like to be, I don't want to short. I don't understand shorting. I don't ever want to short. Anybody here that doesn't like shorting the market? Okay, so there's a few folks in here. Okay, this is going to be really critical for you guys that don't short. Okay. And that is, if the market starts downtrending, you're going to have a lot fewer choices to trade. Think about that for a second. If the market is downtrending, and even if you find a stock that's trending up, is it going to be harder for that stock to trend up and move up? It's going to take more time if it does. It's going to grind around. It's going to pull back more. It's going to dance around in consolidations more if the market is trending lower. So if the market is trending lower and you don't like to short, you have to be extremely disciplined. If we're trending lower, the market's trending lower, you cannot be chasing around trades. Okay? Anybody ever done? I mean, I know you guys have done that. We've all done that, right? I did that. Back before I knew anything about shorting and or even wanted to short. Okay? I would fight, and that's literally what we're doing. If the market is trending down and we're only looking at stocks trying to go up, we're fighting the market. Do you ever think about that? It's like stepping into the ring with Muhammad Ali, or that may be before some of you guys' time, Muhammad Ali. But we're not going to win that fight. Okay? We're not going to win by fighting the market. So if you only want to trade long and the market is trending lower, you have to have the discipline to stand aside. It's okay if you have a few trades on, but those few trades have to be really quality trends. You had to have got in with a low risk entry on those. And you have to be willing to hold those a little bit longer than you normally would, because it's going to be harder for them to move up. Cassius Clay. Yeah, exactly. I grew up a real fight fan. In fact, I boxed for years. I boxed clear up into college. I've always been a real fight fan. So I've got all of those old guys ingrained in my head. I love those old fights. I just, seriously, I would watch them today if I could get when I get replays on television. I watch them again. Okay, so rule number one for all of you guys that do not like to short, you have to be disciplined and wait for trades that are trending when the market is trending up. Predominantly, you want to wait for the market to return to a trend. So currently, right now, diamonds holding a trend, barely holding a trend. The SPY holding a trend. The Qs holding a trend. IWM holding a trend. So currently, we are holding this uptrend. How do you know we're in an uptrend? Because we broke the downtrend, and so far, we're holding it as support. So far. Okay, that's how you know we're in an uptrend. We're making higher highs followed by lower highs. That's how we know we're in an uptrend. So we're not going to chase stocks, okay? We're not going to chase stocks if the market starts downtrending, and we're going to try to trade at the same level of intensity that we would if the market was trending up, but we're only looking for long trades. Okay? Big no-no. Don't do that. We're not big enough to fight the market, and all that's going to do is hand you a whole lot of losses. Just one after the other. It's going to beat your confidence to a pulp. Okay? Second thing we're going to do is if we are trending up, we are going to look for good quality trending stocks. Not stocks that are whipping up and down all over the place. Not stocks with great big candle whips like we have here in the diamonds. I mean, we're in a short trade right now on LMT and Right Way Options. We're up 95%. Does this look like a stock that you want to be trying to bet long on? No. All kinds of whip, big moves up and down. This chart is a mess, and there's no trend except down at this moment. We have to wait for an uptrend. So we're going to look for stocks, and this is a really expensive one, but they'll look more like this. Deliberate price action. Not great big giant whips. Consistently moving. Okay? We're going to look for good quality trends in this type of market. Remember, it's not about the quantity of trades that you make, particularly in a market that's choppy and funky like it is. It's about the quality of trades that you make. Because in order to make money with these, we have to hold them for a period of time. Let's take a look. Let's just examine right here in Netflix. We chopped sideways 1, 2, 3, 4, 5, 6, 7 days. And then we moved up 1, 2, 3 days. And then we went sideways 1, 2, 3, 4, 5, 6, 7, 8 days. Okay? So in the better part of a month, there were 3 really good bullish days in trend. Okay, now we're back moving up. And what did we do? We moved 1, 2, 3, and now it looks like we're slipping back into consolidation. We're going to have to be willing to hold stocks a little bit longer. Okay, so in particularly stocks. Now we can make, and everyone knows with trading options, we can make our goals. We can make really good money on 1, 2, and 3 day moves. Okay, but with a stock, we're going to have to hold longer. So we're going to have to plan a little bit more time in the trade. We find good stocks like Twilio. Look at how much time. This thing is still holding up. It's still maintaining trend. But look at how much time it moves up by comparison to how much time it chops or goes sideways. So if you enter those trades, you want to make sure you're entering those at a low risk entry point. We're not chasing the run. That's what I mean by that is we're not chasing this move here trying to buy this. We're waiting for the pullback and looking for the entry signal after the pullback. We're not chasing. We're trying to get in at low risk entry points. And then we have to be willing to hold over toward the trend. And this is something I show almost every day in Right Way Options, and something that I think we forget about a lot in trading. It's very, very common. No matter how fast a stock may plow out of here on an earnings event, in all likelihood, it's going to find its way back to trend either by consolidating it or by pulling back to it. Most of the time. Okay, so we have to learn to be a little bit more patient and wait on the trade to move. Okay, because the market's struggling right now. It's struggling with energy. Have you guys noticed that we've just got a loss of, momentum has just dropped out of the market? We just don't have much momentum. And when we try to gain some momentum, it's in spurts. We hop higher for a couple of days. We try to get going lower and we plow lower for a couple of days, but we don't really get anything really going. A whole bunch of fits and starts. So we have to be willing to hold those good quality trends a little bit longer than we normally would. Okay? Watching for those trades and waiting for those good quality positions. And we're looking for that concise price action, deliberate price action. We don't want to be buying a chart that's just full of wicks and tails. The stock is flying up and flying down. It's all over the place. It's not respecting support and resistance, and it's not respecting trend. Well, in a choppy market, you know what they call that? Gambling. There'd be really nothing different than you just going and placing your money on black on a roulette wheel or red. Okay? Because we could flip higher or flip lower, and that's what we've been doing, right? So unless we have a good quality stock to start with, and what I mean, I'm not talking about good quality and as in Jim Cramer has read the last 40 quarterly reports and that kind of stuff. I'm talking about good quality price action, trending price action, strong, showing buyers holding it up. Even when the market sinks, it holds up pretty darn well. Okay, that's what we want to look for. Okay, we want to look for those trends that are holding on. Now, somebody asked a question about chasing. How do you know when you're chasing? By following a process. Okay, if you don't know what your risk tolerance number is, you need to find that out before you trade again. And what I mean, what's your risk tolerance number? How much are you willing to lose on a trade? How much are you willing to lose on that trade and then go, yeah, that happens, no big deal, move on to the next trade? That's your risk tolerance number. And if you plan a trade from your entry and you're honest with where the stop loss should be, if my entry is here, okay, and my stop loss is here, before I enter that trade, I need to know how many dollars I'm risking. And if that is greater than my tolerance for risk, I don't care how perfect the chart looks, this is not your trade. That's how you know when you're chasing. If all of a sudden you look at a great chart, it looks great. You see everybody in the room wants to buy this thing. But you put your numbers to it and it doesn't fit you, that is not your trade. That's how you know you're chasing. By following a process. And not just part of the time, but all the time. Remember at the beginning, I said, this is a great market for stock pickers with discipline. If you don't follow a discipline, you're going to be subject to the whips of this market. And you're going to wonder why, when it's all over, why you lost everything that you made last year trying to play the same game when the game has changed. Dory, I don't do a tremendous amount of scanning. What I do is I look, I do have scans, don't get me wrong, but what I do is I build watch lists. And I've said this, I have a watch list. This is March. I haven't even put the new one together yet. This is the March options focus watch list. I pull this right off of the CBOE. I take about the top 250, 300 stocks. I'm not even really concerned. I just start scrolling down until I decide to stop. I stop and I put those lists. 99% of all of my option trades are going to come right out of that list. That's it. I'm not scanning for option trades. 99% of all of my option trades will come right out of that list. And the reason is because I sort that list by criteria. You guys have seen my criteria, and if you don't have it, I can give it to you. But the criteria is I want to make sure that we're trending. I don't have to look at this entire list. If the market is trending up, I run this little sort in this list right here. And just that quickly, I find out which stocks are trending. And you can see as I go down their list, this little green line that's underneath disappears. These stocks are no longer in a 20-day trend. Doesn't mean that they're bad stocks. In fact, I mentioned OLED today, popped up on rumor from Apple today, popped up and pulled back hard. Those who chased that one got hurt big time. So I'm looking at stocks that are trending. If I believe the trend is up, if the market is showing me the trend is up, I'm going to be looking at stocks that are trending up. I'm not going to mess with, I'm not even going to waste time. If the stock is moving opposite of the market, I don't care how beautiful that little bottom is down there. If the trend is still down, I'm not interested. I'm going to stay disciplined and only trade stocks that are trending with the market. Okay? So the majority of what I do is build lists. Now, Simple Scan will run the same list that I do here. I want to make sure it has a trend. And I use the 34 EMA. And you guys have all seen that scan. 34 EMA trending 20 days. Notice I'm not even trying to catch the bottom of the trend. I don't even care about that. I want to make sure that the stock is trending before I look at it. Okay. Now I can catch those early. If you guys like rounded bottom breakouts, I can catch those early with the rounded bottom breakout pattern. What is the rounded bottom breakout pattern? Rounded bottom breakout pattern is the stock has been trending down and all of a sudden starts to break the downtrend, hold the 50-day moving average, starts to trend higher. Okay, so I will trade those, but I have to see evidence or proof that once we break the downtrend, that it can actually hold it as support. Until that proof occurs, I am not interested. That's what I mean about discipline, is I am really set to a set of rules. Now, it's okay if you have rules differently than mine. In fact, I recommend it. The rule needs to fit you. But if you can prove that that works all the time or most of the time, you need to set that rule and hold that rule. It doesn't have to be 3 bars, Dory. Doesn't have to be 3 bars. It can be a long consolidation. It can be lots of different things. But proof. I want to see proof that buyers are going to step in above that trend. Because how does a trend get established? I mean, if we've been moving down here, how does a trend get established? We break the uptrend, we hold the support, and buyers start picking this up, creating a higher low. This is the first true evidence that a trend may be coming into play. It could happen in 2 days, it could happen in 2.5 months. It doesn't matter. I mean, look at the chart and define it. Draw it out just like that and say, if I were to explain this to somebody else, if I were to explain this to my brother or sister, how they can be successful in trading, how would you explain the beginning of an uptrend? I mean, if the stock has been trending down, is it that first move up that says we're in an uptrend? No, we've all seen that before, right? The stock pops up and then it goes to a new low. It cannot hold the support. We don't want to chase those. We want to wait for proof that it can hold. Proof of support. Then we can trade it. Same thing is true when I short. When I short a trade and we fail through support levels, right here, we fail through this support level, we rally back, we test it as resistance. I want to see that confirmation of failure here at resistance before I take a trade short. Okay, no big, I mean, I'm just following a trend. And that's really one of the big differences between, I think, and some people say it's just semantics, but to me it's not just semantics. I don't predict which way the market is going to go. When it shows me which way it wants to go, then I put on a trade and I follow it. I don't try to predict the turn point. I don't even care if I catch the best price. I want proof of my directional bias in the trade, because clearly if we fail through this support and we've moved down like that, I'm going to be thinking bearish. Any rally back that cannot prove itself is a candidate to short. Okay, let's take a look at like Harley Davidson. Take a look at Harley Davidson. Do you guys see what I've got drawn up here? Do you guys think this looks like proof of support? We found our bottom in here. We held our bottom. Held our bottom. I hope you're holding your own bottoms. Otherwise you get slapped. Just a second here. It changed tools on me here. I know that gets me slapped. Okay, I've been married for 32 years. And that'll get me slapped. So when it holds a bottom, what I'm looking for is I'm looking for that breakout and then proof that buyers are going to step in somewhere around support here and support that price. And that's exactly what's going on here in Harley Davidson right now. Now that doesn't mean this can't fail. I don't want to give you the impression that just because I wait or just because you wait, this trade is always going to win. No, but because I've waited for that proof, I now know exactly where my stop loss should be, right? It's going to be close. It's going to be tight right in here. Okay? So if it does fail, I take a small loss. I'm okay with small losses. I'll take a lot of small losses rather than chasing a stock for the long run. And you guys will see me mark up charts exactly like this all the time. All you got to do is follow this line right here. Take this downtrend break. Oh, darn it. And notice the difference right here. Here we broke the trend, but we couldn't hold it. We tried it again, and we couldn't hold it. Chasing those trades is going to cost you a ton of money. However, if we wait for the breakout, the pullback, it tests and holds, and buyers start stepping in here, that's my trade, because that's the first proof of a higher low, the beginning of an uptrend. And I will wait for that every time. I'm a stickler on that. And it doesn't matter if it's trending, doesn't matter if it's reversing a trend, I'm going to hold to that. So I'm looking for good quality stocks, meaning concise price action, low risk entry points, and I have to be willing to hold trades a little bit longer than we, were back in 2017. When everything would, buy a stock and it moved up. Now we have to hold on because it may, even Harley here, Harley may pop up here and then just go sideways here as the market chops around. Could go that way 2 or 3 weeks even. Still be a good quality uptrend, and it's just waiting for that next bullish move of the market to pop. Okay, that's important. So follow those details. That's really important. Now for the option trader and those who are willing to short. Okay, if the market is trending down, should you be trading uptrending stocks, trying to trade against the direction of the market? If you do, it's okay as long as you don't do that's not your full diet. Okay? You've got to have some balance in there. You got to be moving with the market when possible. Okay, the market wants us to go in a direction, and it's going to take us there no matter whether we like it or not. No matter whether Jim Cramer says that this is a great stock and this should be worth a whole bunch of money, and doggone it, these people just don't know what they're talking about. That doesn't matter. If it's not moving, it's not moving. And if nobody loves it, it's not going to move. No matter how great a company it is, no matter what the story behind it is, if they don't care, they don't care. Stay away from those stocks when they're moving against the direction of the market, for the most part. Now, what if we're in a consolidation? The market itself is consolidating in a tight range. The overall market's consolidating. A lot of people look at that as that's a bad thing. I don't. I look at that as that's a good thing. Because the market's telling me something here. If we're bouncing around inside this range, we're waiting for something. What's a consolidation tell us? That buyers and sellers are pretty much in agreement that this is where prices should be. So during that period in the overall market, if the Dow, the SPY, is chopping sideways, we know in order for this to chop sideways, there has to be stocks that are trending up. So if this consolidation is occurring in an uptrend, stock has been moving, or Dow has been moving up, and this consolidation occurs, I'm going to stay with the direction of the trend as long as that trend holds. As long as that trend holds. Okay. And the reason I like consolidations is because we're building a platform to either launch from higher or to break down from. Both of those can be tradable. So I don't mind a market that goes sideways. What it does mean is I have to work really hard to find good quality trending stocks. Because as long as we stay in this consolidation area, and this could be a rather wide range, kind of whipping around, a little bit like what we're doing right now. But we're seeing good quality trends in those moves, right? I mean, have you guys seen Intel? Lots of back and forth. Lots of back and forth, but it's still trending. It's holding up. It wants to go higher. It just needs a little market cooperation from time to time to help it do that. So I have to be willing to sit through this back and forth. Now, as an option trader, this becomes a lot easier, I think, because as an option trader, I can look out there and I can sell calls against this trade and get paid to wait for this thing to move up. Okay, we did that in this. We sold this 57.5 option here on Intel. We collected 70 cents for it. I think as of today, that option is selling for like 40 some cents. So we've already made a really nice percentage gain on just selling that and waiting. Now, the other part of selling that option is the importance that we want that. If it does move up there, I'm okay with them taking the stock at 57.5. Don't sell an option unless you're willing to have them take it. Okay, so if it moves up there and they take it away from me, I'm going to be happy going to the bank, collecting a very nice profit on the trade. In there. Do I sell naked puts? Rare occasion, Jake. Naked puts can be very, very profitable. They just require an awful lot of margin. And a lot of the folks in the service don't have great big accounts. Okay? And so doing a lot of naked put selling doesn't fit most of those folks. And so I consequently, I'm not looking for them very often because it just requires a lot of margin. A good naked put seller can make really good money. Okay. But it does require some of that iron constitution. You can't panic if you've sold a naked put and the stock's starting to move down against you. You cannot panic. You got to stay with that trade, hoping that it bounces off the support level that you base that trade around. Okay? Can't panic. Got to stay with the trade. So, do I do a lot of them? No, I don't. In fact, I don't have to. I make really good money without taking that much risk in other trades. Don't have to have that big margin hanging out there. And that one day thing where a tweet storm goes out from the White House and China responds in a big way and we open up the market 500 points lower. I don't have to worry about that having a whole bunch of naked puts out there. Okay. So as an option trader, this can be a little bit easier. And for those of you who do options but really don't buy puts, you really need to consider the reasoning behind your not buying puts, because a put carries the same risk profile as a call. With a call option, we know the maximum amount we can lose is what we pay for that call option. The exact same thing is true of the puts. The maximum we can lose is what we pay for the put options. Okay? So except for the direction, the calls we want the stock to go up, the puts we want the stock to go down, the risk of those trades are virtually identical. They're the same trade because we're actually both long. If we buy a call option, we're long a call. If we buy a put option, we're long a put. Okay, so we can take advantage of both sides of the market with equal risk profiles. So if a market is consolidating, should we have, along with our long trades, would it be okay to have some short trades at the same time? A little bit of balance in the account? Yeah, they're defined risk trades. You're right, Jake. So currently, right now, Right Way Options, we have long trades. We're holding Intel. I think Intel, we have a 30% gain in Intel. Okay. We're holding a trade in Tesla. That's a short trade. Right now, we're running about 45% gain in our short trade in Tesla. Okay, so we're both sides of this market. If we get a really ugly day, a really big whip, the short down day, our short trades actually improve against our long trades that might be suffering a little bit that day. So having that little bit of balance can be very, very important to your success. Okay, and also, if you're an option trader, you really need to look into spread trading. In this kind of market, spread trading can be great. Doing combination spread trades, it can get kind of complicated. We talked about that a lot today in Right Way Options. Different ways that you can trade things and pull money out of it without taking high risk. And what I mean by that is by putting on trades that have 70 to 80% probability of success from the moment you enter. And they're not big trades. Okay? We're not talking about giant winning trades. We're not looking for big wins when we do spread trades. We're looking for consistent base hits. I gave this example today. How many of you would trade for $50? Would you put on a trade that has a potential to make you $50? Some people would. Yep. Good, good. As long as the risk was okay. Rick, you win the prize. That's what I wanted to hear. As long as you're not risking too much. If you're risking $25 to make 50, yeah, I'll make that trade every day, right? Okay. But what if you put on spread trades that have a decay rate of about $50 per day in just simple time decay? You ever thought about that? $50 a day over the course of the month? What are you going to make? Pretty decent paycheck, right? Not too bad. Okay, so what we want to look for as option traders is we want to look for spread trades that give us that combined decay rate, is that decay rate that just continues to work for us. And they can be both long bias trades or short bias trades. Okay, but we want to have that decay rate working in our favor. Jamie, yes. Low deltas, high thetas. That's what we're looking for. So if we combine up several small trades, you know, a trade they'll have a maximum win. You might have one that maximum wins $100. The next one you look at, it's 175, and there's one in there that makes you 150, and then you find a really good one that's going to make you 225. But what we're looking for is we're looking, and some of these maybe we're looking this one to go up and this one to go down, up and down, and what we're really looking for is the decay rate that's building that $50 a day, $100 a day, whatever it is that you're working on. You're letting that time decay out to bring in that consistent money. Okay, really important for the option trader to be looking at those. And the way you put those trades on are really simple. You look at big support and resistance levels. Base your trades around those. Okay, we put on this spread trade in Tesla. I want you guys to take a look at Tesla. Would anyone agree that 310, that's a pretty substantial resistance zone right now? So we sold the 310, we bought the 315. We've been in that for, I don't know, 20 days? Maybe. We're up 45% on the trade. Remember, that's spread trade. The only thing that has to happen is this has to stay below that resistance. That's it. Stay below that resistance and we make money. The trade in LMT is using a ratio trade, but it wouldn't have to be a ratio trade. We're up 95% in this trade. This stock just has to stay below 340. If the stock stays below 340, we make our maximum profit in the trade at expiration. Now, when you're at 45% in a spread trade, if you're worried about, you know, because I'm going to get this question. Tesla bounced up today, right? Aren't you worried about that, Doug? What do we do? Aren't you worried about that? Well, no, I'm not worried about that. Think about what the trade is. We have an additional level of resistance right here that Tesla would have to get through. Okay, if it could get through that and then prove it's going to hold, then I have to worry about this. Because right now, this is far enough away. The more the market chops, the more Tesla chops around under here, that every day it pays me. Thank you, Nell. Thank you. Every day it pays me. As long as it stays below 310. So I don't have to panic about it. But at the same time, if you're comfortable saying, geez, a 45% gain, I think I can take that, then take it. There's no problem with taking a 45% gain, right? If you're really stressed or worried about this, I'm not yet. I am concerned that it's holding this support right here, and we've tested it 3 times. That is a problem for me. Okay, but if this were to follow through tomorrow and hit up here and fail again, I'm in Fat City. Dory, we have rules on how we trade all of our options for different strategies. We have rules on how we trade those, and so I don't have enough time to explain all of them here. I apologize. I just don't have enough time to go through every little detail of all the rules of different strategies, because they're different if we're taking a directional long trade or we're taking a directional short trade or spreads. Okay, so but we do have specific rules that we trade these around. And the reason we have the rules is to put the odds in our favor. That's what's most important to me, that we put the odds in our favor from the beginning of the trade. Okay. Yeah, Dory, during the 2 hour, we do 2 hours every day of training. 2 hours every day of trading in right way options. So you could take a trial for right way options. But we do 2 hours of every trading day we spend on training with the members. Okay? I don't know any other service that spends that much time. Okay. Depends on the kind of spread trades, Confetti, or Confi, or whatever you're going by there. It depends on the kind of spread trade it is. Butterfly trade, credit spread, ratio spread, back ratio spread. There's iron condors. Those are all spread trades. Yeah, $14 for a month trial. Well, let's think of what's your maximum risk. You guys can figure that out from here, right? What's the maximum risk if you sell the 310 and buy the 315? What's your max risk? If you don't know that, then you're not ready to trade spreads. That's right. Your maximum risk here is $5. Okay? That's if you aren't paying attention, you're not managing the trade at all. That means on a one contract trade, your risk is $500. Now, what part of anything that I've said would suggest that I don't manage this trade? Didn't I just say something here? If this were to cross up and hold this as support, I would have a problem with this trade. If I get proof that this is going to hold in here and move higher off of this area, I have to close this trade. Now, I'm in a happy situation right now. I will close this trade at a profit, because I bought it right, and I'm going to manage that trade correctly. Okay? So my risk was $500 minus my credit on this trade. You subtract how much you collected on the trade. That's your maximum risk in the position. But your maximum risk isn't what you should be taking, because if you've planned your trade correctly, you have a place that you're going to be out of the trade before you ever come close to your maximum risk on the position. Okay? Being successful in spread trading requires good quality placement of that trade. And time is very important to that trade as well. So we got to be right on the placement when we put those trades on, and the timing in which we put them on, to put the odds in our favor. Now, when we bought this trade, when we put this trade on, the math in options, and by the way, options are all mathematics, the math from the second we put this trade on said we had a 70% chance of winning this trade. That's how I place every trade. with a high probability of success, or I don't trade it. 50-50 is not good enough for me when it comes to spread trading. I have to have a higher probability of success in that position. I actually laid out a trade here in Netflix today for a bull call credit spread. I mean a bull put credit spread and a broken wing butterfly. And you combine the two trades together, it had better than an 80% probability of success. Now, was it a giant winner? Nope. It wasn't. I think if I remember right, it was going to make us $230 or something on a single wide. $230. How many $230 a month per month do you need to just make some really serious money? If I can put those trades on with about an 70 to 80% probability of success, and have a stop in place, if it goes against me, I know where I'm going to be out of that trade. So I'm not taking anywhere near the maximum risk on the trade. By the way, I mean, use the math. Think about it for a second. If you take trades that have a 70% probability of success, and you do 1,000 trades, how many of those are you likely going to win? The math tells you you should win 700 of them. Now, there's going to be periods in any option trader or spread trader's life that 70%, something happens big in the market, and you have a streak where you get five or six, you get a bunch of losers all at the same time. That happens in every trader's life. But if you continue to follow the rules, the math will work itself out. The math is there for a reason. That's how they set the prices for the option. That means that's actually the probability of these options. The math will work out over the course of time. But you have to learn to set them properly with the proper timing. William, no, don't necessarily always hold to expiration. In fact, I will tell people, you get into the 30, 40, 50% profit. There's no reason why you can't take that profit. But if I'm looking at a trade that's been working in my direction and the odds of me winning is so huge, I mean, if I'm in a spread trade on LMT, I just showed you that trade in LMT, and we know it's a spread trade, and I'm up 95% at the close of today on that trade. What are the odds that I will break even on this trade? That it would have to move so much that I could only break even. My odds would only be 5% that occurs. That's right. So as time passes and the stock moves away from a support or away from a resistance as we plan those trades, and time passes, it's working in our favor. If we get a substantial change, we have to close that trade, but we shouldn't have to take a massive loss on the position. Okay? We just have to be smart about how we place those trades and the proper timing. Okay, so those can be very successful in a challenging market like this, as well as just sticking with those really good quality charts, those charts that are performing well. Now, I know Netflix is really expensive and all, and you probably can't, not everybody can trade Netflix because of its cost, but there are charts that do great things. And they're not that expensive. Look at the trade there in Club, or the trend. And now it's consolidating. Bullish engulfing candle today. Anybody like that chart? Anybody think there's a possibility that you should at least be paying attention to that? Wouldn't this right in here give us a clue that at this moment in time, buyers and sellers are pretty much agreement on price, but we see buyers picking this up right here? Any follow through to the upside on that would suggest this stock is going to do this. Maintain its trend. We move up. Doggone, this thing keeps changing. We move up, we come back to trend. We move up, we come back to trend. Come back to trend. Come back to trend. Normal price action. Yeah, BIIB, I mentioned that today. Actually, I've been kind of keeping an eye on it here for a while. I'm not a big biotech trader because biotechs tend to be really volatile. But here's a setup right here, guys. Stock breaks its downtrend. Makes a higher low, breaks out of this level, holds that level as support. Buyers step in here, holding not only the trend, but holding support. You guys like that trade? And now we've moved up through this next level. We proved that we can hold it. And you can see we've got buyers in here. Buyers potentially coming in on that trade. Dory, what my entry point is on Club is not important to what your entry point is. Remember when I said about planning your trade, following your process? You could look at that trade and say, there is no way I would ever risk that much money to my stop loss. So it doesn't matter what my trade would be like. Remember, what do we know about a bullish engulfing candle? We like bullish engulfing candles, right? Anybody in here doesn't like a bullish engulfing candle at support? If you don't like a bullish engulfing candle on a trending stock at support, we need to talk. Okay, so what do you need to see on there to see buyers stepping in? Wouldn't it be follow through? Buyers following through, pushing it through this level of resistance right here, this little consolidating resistance right here. Buyers following through. And if your stop loss is right underneath here, is that your trade? Is there enough in that trade for you to make that position based on the risk? Hey, Jamie, that statement right there is a statement that's going to keep you in trouble in the market forever. You're trying to predict what happens next. Stop doing that. I just showed you a stock that put in a bullish engulfing candle right off of the trend. Right off of the trend. How many times have you said, oh, this stock's it's gone up too far, it's got to go down, and watch that stock just continue to go higher? Tell me, there's a whole bunch of people in here who have done that. Oh, Stochastic says this has got to go down. And the stock just keeps going up. Stop predicting which way it's going to go. Follow it and let it take you there. I could tell you there is no way I could tell you. There's no way anyone in here could tell you. I've got 29 years in the market. Rick's been in the market over 30 years. Rick would look at this and he would tell you exactly this. I have no idea what's going to happen to it tomorrow. Or the next day, or the day after that, or a month from now. But if we give up that idea that we can predict and just follow it, how many people said, well, this has just gone up too far? Right here. I'm going to show you some charts. And I'm going to go to a weekly because I do some longer term holds. Okay. And I want to show you, I bought BDX right there on that pink arrow. That was my entry into BDX. I'm kind of regretting it. I'm okay with it, but I'm kind of regretting. I finally sold my last bit of this stock right here. So I bought that in 2013. Don't tell me you can predict how far a stock can go up, because you can't. Who would have guessed this would have gone up that many years? But it did. It did. I'm going to show you an old trade in Johnson & Johnson. See that little pink arrow right there? That was an entry into J&J. See that great big giant wedge pattern here? Ascending triangle. I entered that trade right there. Let me back this up and show you something here. On this weekly chart, that didn't have a black candle for 1, 2, 3, 4, almost 5 months. Not one black candle. No one could tell you that that was going to occur. No one could tell you that, oh, it's gone up so far, it has to come down. Really? It does? But all you have to do is buy it and follow it when it starts to move. You never know when this is going to occur. You will never know when this is going to occur. Make your entry into that trade and then follow and manage that position. And how do you know it's an entry? Because you calculate from your entry to your stop. That's an acceptable trade. You put the position on and manage it. It's that simple, guys. Stop predicting. Start following. We put on a trade in Right Way Options here not that long ago. can't find my little clear off to the left, and I don't want to be, and I can't find my little back where I want to be. Here we are. There it is. We put on a trade in BSX, and no more than put that trade on, and somebody mentioned, well, geez, 60 Minutes did an expose on BSX, and it was just awful. Nobody should own that. But it didn't stop us from making about a 25-30% profit on that in just a few days. Follow the price action. Follow the chart. Quit trying to predict it and stay with the price pattern. Stay with the trade. Hopping in and out because you get this wild hair idea that the stock has to go down. Can't keep going up. It's gone up too far. I've heard that so many times. And then I just make money why it keeps going up. Because I don't predict it. I just move with it. Does that make sense, guys? It's really, really simple. And it's so simple that most people have a hard time getting a hold of it. I'm making that connection that all we have to do is follow. We can give up all of these really fancy systems and all this kind of, whiz bang indicators and all that kind of stuff, and just follow what the chart's telling us. Stock wants to go up. I got a good entry on this trade. Now let's let it do its thing. And then just repeat it over and over and over. It doesn't require any fancy manipulations. And even in a crummy market today, this is going on. A stock is breaking its downtrend. It's holding onto a support level, and buyers are stepping in. It happens every day in the market. We just have to look for them. We have to build these charts in our lists, build that quality list and manage that list, and just wait for the next trade. Does that make sense? Am I just, preaching it? I want you guys to be catching on to this. We just have to stick with the chart that's telling us something, get into that position, and then manage that position. Will some of those be losers? Yes. And that's why you have to know what your tolerance to risk is, because some of them are going to lose. That's part of trading. It's just the way it is. It's part of being in business. And trading is a business just like any other. Losses will occur. So our job is to get those entry points where we have the least risk that we can have. It fits our risk tolerance, and we're being strict on the rules of that trade. Either the stock performs the way we want it to perform, or we don't want the trade. Take care now. Either it performs the way we want it to perform, or we don't want the trade. Anybody in Right Way Options will tell you I'm extremely picky about the trades I take. I don't worry about trading every day. Not even close. I worry about picking up good quality trades at the right time. because I know this. It's more about the quality of trade than it is the quantity of trade that's going to make you successful over time. Danielle, if I can find it, I sure will. I don't know what I'm going to do. I'm getting too many emails, and I just literally do not have the time to answer 200 or 300 emails that I'm getting on a daily basis. I don't know what I'm going to do about that because I know there's legitimate things that I really need to help people with. And I apologize. If you're in the room, Daniel, at any time, hit me up when you're in the room and I'll try to answer that question as soon as I possibly can. Okay? And I apologize. I don't know what I'm going to do. I really don't. Because I get so many questions, so much email. Yeah, change my email address. I've already got like 4 email addresses and they all just pile up. So, but I will look for that. Um, in the chat room or something, if you could, even if you can just copy and paste that to me or ask the question directly in the room. I got nothing to hide here. So just ask the question. Dory, I don't do much on weeklies. In fact, I really don't even, unless you're a day trader, I don't really recommend weeklies. Weeklies are such a short time frame. Remember, I said timing is very important. Okay. What happens when you buy a weekly and the next day it moves against you? What are your how can you do anything with that trade? I look at weeklies as kind of a yes no answer. Yeah, cry. Yeah. They're just a yes no answer. So unless you're a day trader looking at intraday charts, okay, and they can be perfectly good for the day trader looking at intraday charts. There's a use for them. But for most swing traders, particularly in a choppy market, I mean, you know this as well as anyone else. You can buy a stock that has the perfect entry signal. Man, this thing couldn't look any better. And then it consolidates for the next week and a half. Okay. So for directional trades, not so good. For spread trades, I know a lot of people like to use them for spread trades. It sounds like that's what Jamie's doing for spread trades. But even there, you have to have more of an intraday look at that chart. Because if you're wrong on that trade, it takes one day and you take the maximum loss on that position. And there's no recourse in it. Because on the weekly, you're so close to price on every trade that you put on, it takes one day move and you get spanked. Yep, you get spanked hard. Thank you, Jamie. You get spanked hard. And one wrong trade on a spread trade can wipe out 3, 4, or more winning spread trades, maximum win spread trades. Okay. And that's why I don't like them very much, because there's no flexibility in them. Okay. It's just that you're just too close to price. Too close to price. BWA, downtrending, has a price support right here. And you can see that price support kind of extends clear over here. Okay. So a breakdown from here definitely could be a short trade as long as it doesn't bounce off of that support. If it breaks down through here, you've probably got a really good trade. Just make sure you're paying attention to that. We are downtrending and we're close to support. As far back as, I mean, price makes a difference all the way back. It's amazing how stocks will stay in the same. I don't think that's line straight. There we go. That's better. Price will make, I mean, long term support and resistance levels, very long term. And if you learn to trade around them, you make money. I just showed you that in Johnson & Johnson on a weekly chart. This wedge was being built for years. That's important. So if you want to trade around the big levels, you got to pay attention to the big levels. One thing I would tell you, Bill, on that trade, that BWA trade, here's one thing I wouldn't do. Come on, give me back there. The BWA. Sorry, just a second. What was that stock again? I'm looking for it. BWA. It was BWA. What I wouldn't do, this has already moved significantly today. Okay. This is down almost 6% today. So where's your stop loss going to be on this trade? Where's your stop loss going to be? Yeah, it's huge. Sorry, I must have been looking at the weekly when I first looked at that. Downtrend is really good, but your failure pattern was up here. Your short was up here. This moves 6% today. You're going to take a massive risk in this trade by chasing it now. Okay. So you want to take those low risk entries on a short trade the same way you want to take those long trades. Now, here's what I do see in this chart that I think could be really good for you, Bill. There's a head and shoulders top here. You guys see that? This is the neckline. So the way I would have to trade this is if this comes down here and hits in here, I would need to see a tight consolidation in here to give me a level to place a stop loss above if this fails and drops below. If that doesn't occur, if it doesn't occur this way, there's a couple of other scenarios that would work. First, we're building this wedge. Could we not bounce off of this and come back up here and have another opportunity to short it here? Yeah, that's what a wedge tells us, right? That possibility does exist. What about a failure, clear failure? We drop through this level, then we rally back here for the test, and then fail. And you put your short trade on here. Stop loss is just above, and let that trade make its new low. But I always want to look for that pullback to enter that trade, both in a downtrend and an uptrend. I'm going to look for that pullback. I'm not going to chase that big move. Okay, so take this for an example right in here. right over here. This pops this downtrend right here, but I'm not going to chase that move right there. I'm going to make this move up, consolidate, or pull back, prove it can hold above this downtrend, and then show me buyers stepping in before I'm going to enter that trade, because my stop loss is close. So the same thing is true for any downtrend. I'm going to wait for that failure after a retest of resistance and show me that failure before I enter that short trade with my stop loss above. The low risk entry. The low risk entry. Okay. Awesome, guys. Well, hey, I hope you got something out of this tonight. I went longer than I expected that I would. I am recording this, and I'll tell you what, I'm gonna load this over. It probably won't be there till late tonight or tomorrow, but I will load this over to my YouTube channel. Is everyone here subscribed to my YouTube channel? If you're not, do me a favor. Look me up, subscribe to my YouTube channel. I'll load this over here. You can watch it over again if there's things that you want to kind of reinforce or pick up on. Okay. Currently, looking at the market, just a second here. Looking at the market right now, futures are just barely higher, 8 points higher. Oh, thank you, Alan. Appreciate that. So check that out. It'll be there for everyone to watch. I want to thank you guys very much. If this is the first time you've been here and you like what you've heard, Rick is very much the same way. We're very matter of fact, and we don't blow smoke. Okay? We're not helping you as a trader unless we tell you the truth. Okay? And the truth of the matter is that every trader has challenges. And sometimes you need a little help. You need some education. You need some coaching. You need something along those lines to help you get over that hump. I worked with a mentor, a coach, for several years as a trader to get me over that hump. If you need that help, if you can, or if you're interested in the services, please go to the website and check it out. Give us a shot. Take a trial. We would really appreciate it. It's $14, guys. I mean, you can't go to McDonald's hardly for $14 anymore. $14 for a full month, all access. No, nothing held from you on that. So if you've never not here and you've never taken a shot at it, trust me, you'll have more opportunities to make that $14 back. And what we teach during the day should be much more value. Daniel, that's what you're trying to reach me for, is coaching. I appreciate that. By the way, let me just point this out, you guys. If you're contacting me about coaching, if you just go to the website itself, just a second here, go to the website, and I will bring that up here. Go to the website and see right here under the tab, let's see, training. You can go to the webpage on private coaching. Okay, and under this coaching tab, you can get information about all of the coaches, Ed, Rick, myself, and Steve. And you can click under there and read about what their process is, what you're going to be learning from. So if you have questions on coaching, just know that it's most of your answers will be answered here. Okay. And then if you decide you want to do something, all you got to do is click the buy button and go through to the buy page, and you're good to go. Do I use a whistle when I coach? No, I don't use a whistle. So I know a lot of people don't know that that's there. So just go to the underneath training and private coaching. Most of your questions can be answered there. Okay. And you can select from any of the coaches. Read through, because I may not be the best coach for you. There may be, Rick might be the perfect fit. Steve might be the fit. Ed might be the fit. Check it out. See who's going to fit you the best, and then we'll get started. Okay. Well, guys, I want to thank you very much for being here today. Oh, and by the way, there's tons of information on the website here. Take advantage of it. Take advantage of it. There's tons of information in here that's free. J-hook pattern, the bearish H, bullish flags, bullish pennants. There's tons of information here on the website that you can learn. And that's on the free side even. You can access a lot of that. Some of that is members content that you're seeing there, but a lot of it is free. Get in there and dig around on the website. There's tons of information in there. Really good quality information. Okay? Take advantage of what's there. We really appreciate you showing up tonight. I really do. You guys are awesome. You're diehards. Thank you very much for being here tonight. Hopefully you got something out of this tonight. We're likely to have that challenging summer. So we're going to have to be really disciplined and very picky about the trades we take. But if you do that, there's money to be made. Okay? Awesome. Everyone, have a great evening. We'll talk to you all very, very soon. Thanks for being here tonight. You guys are the best. And I'll get this loaded over to YouTube as soon as I can. Have a great one, guys. We'll see you tomorrow.